following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search the Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there had a fun and not too eventful weekend. Hope you didn't lose too much sleep fretting over the old debt kerfuffle there in Washington. Will there be an agreement? Will there not be an agreement? Will they come to a compromise? Will there be an impasse? Back and forth all weekend long. And it looked like this morning, it looked like the worst was over. The market was rallying. Well, we'll get to all that, I suppose, in the old trading block. I'm getting ahead of myself. It's just all too exciting. But my name is Mark Longo from the OptionsInsider.com and the old Options Insider Radio Network. And many of you may have also seen our Option Block feed, which we just released, which is up there now in the new and noteworthy section of the iTunes business store, their iTunes business section. So if you go into the podcast section of the iTunes store and click on business or investing, you'll see us up there in all our glory for all the world to see. So nice to see that the new feed is meeting with such excitement and such a rigorous number of downloads. It's always fun to see, and we hope to keep adding more feeds for our other shows in the coming weeks, so stay tuned for those. But of course, I am not alone here on the glorious Option Block All-Star panel. Oh no, I am joined by the good old man from the mountains himself. Good old boys. Good old Uncle Mike Tosaw from Know Your Options Inc. Uncle Mike, how are you doing, and how was the weekend and most of the trading day today for you?
It was exciting, to say the least. I'm excited about talking politics, I guess, in the trading block. But weekend was good. I just got to be with the family for most of the weekend, so that's always a good thing. And just it's an exciting day today, that's for sure. Very, very good stuff. Well, maybe, depending on your viewpoint.
Depending on where you fall on that spectrum, I suppose. And then we are also joined in the OX hot seat by none other than big, crazy Rob Kurzatkowski from Options Express. And Mr. Crazy Rob K., how are you doing this fine Monday afternoon?
Doing well, just a bit confused with all the fallout and of with the debt ceiling and everything else going on. Market liked it, and then the numbers came out, and now the market didn't like it, and it was a fun-filled morning, and then it kind of stalled out in the middle of the day.
Yeah, it was definitely one to keep you glued to the old trading screens on days like today, because there's so much to talk about, and let's dive right into the trading block.
The trading block.
All right, and welcome to the trading block. And as we alluded to in the intro, it was an up day, it was a down day, it was an unched day on the street today. A lot of people had been betting fairly heavily going into the weekend that there was going to be some sell-off in vol coming into Monday or Tuesday because they anticipated a deal being struck over the weekend. So there were a lot of downside bets made in VIX and VXX and other indices like that. And we thought we saw that paying off this morning when it seemed as though the debt impasse had finally been overcome, and the foreign markets rallied and the U.S. markets rallied, and all was looking good, and the vol was starting to come off, and then the economic numbers came in, and the manufacturing numbers in particular from the boys over at ISM, and it just cut the legs out from under the markets, and the rally was erased in a few minutes, and then we were down to the downside once again, and all the vol that had come off came right back into the markets, and it was a depressing day for those people who had been hoping for those spreads to pay off. We did end up closing unch, so the rally came back in the day, so the yo-yo swung back again to the upside before the close, and we ended up closing the day relatively unched, down about 5 handles in the S&P to 1286.94, down about 10 handles to 12,132 in the Dow, and that, keep in mind, the Dow was below 12,000 at one point today. So quite the rally back in the Dow, and the NASDAQ down about 11, almost 12 handles to 27.44. And the VIX cash, after hovering most of the day over 25, around 25.5, it settled down towards the end of the day, down about 6.5%, down 1.59 points to 23.66. So some of those short VIX spreads and short VIX positions starting to pay off. We had seen some initial movements to the downside in the VIX futures, signaling that people were expecting the vol to come off. We didn't see that really play out in the VIX cash until later, a little bit of a lag there between the futures and the cash. But now we're starting to see some of that vol finally creep out of the VIX cash today. But it was indeed an active, if not a nerve-wracking day today on the street. And Uncle Mike, what was the BBI today, sir?
BBI was relatively stable just because it's most of the rolling that I would normally have to do would be in gold and silver. For the most part, I mean, we're pretty well protected to the downside, and so it wasn't a huge issue where we were today. Now, which I'm looking at this, and I'm getting Grigas envy here today, in that we had a 40-point range. Pretty close to a 40-point range in the S&P E-mini. It's almost making me want to become a day trader. I mean, this is just insanity.
You'll notice Mr. Grigas is not on the show today. He's hovering over his keyboard as we speak, slinging his one-lots.
He must be. And, what I thought was interesting is I'm watching the futures last night. 5 o'clock, we gap up 19 points when the market opens. And then after that, they make the announcement, we're going to have a deal, everything's fine. Market really didn't care too much. It kind of stayed flat for a while. Then overnight, if you look at the overnight chart of it, we dipped for a little bit, and then it comes back. And then going into the day, it still didn't really look all that strong from the initial gap up. So in looking at this, it looked to me like, the market didn't seem like it was buying it going into it. And then come 9 o'clock, the ISM numbers come out, and well, the rest of that's, we can probably do a whole segment just on each hour of the market trading day to day with as much action as there was in there. But I don't think the market is convinced that a deal is going to happen. I personally do think that I'm to the side that if I had to be a betting man on this, I do think we're going to get a deal, but I'm not 100% convinced of that as of yet.
Given how hesitant those vol numbers were to come off throughout the day, I'd say there's a significant number, or at least a significant portion of the market out there certainly agrees with you. There's no overestimating the amount of idiocy we can see coming out of Washington, as well as the amount of obstinacy we can see coming down there, and how even a handful of people on either side of the aisle right now could really spoil any sort of deal coming to pass.
Well, it's nuts. It's one where I'm going to be glued to my TV again tonight, just in watching all this. This is one of the most exciting news events since 2008. I remember when I was working for Options Express in the fall of 2008. It was like the most interesting part of my day would be I'd walk from Ogilvy over to the OX building and I'd walk by the Merc every morning and say, all right, well, let's see how badly we're getting killed today. Only 30 points in pre-market. I mean, this is just it's an exciting thing to watch, that's for sure. And we're a very divided nation with a lot of things right now, and it's going to be interesting to see who comes out on top.
You know, I heard some interesting analysis over the weekend, as I'm sure a lot of people did on various areas. I tried to not dive into it too heavily because there's so much nonsense coming at it from both areas, but I heard one interesting comment from some observer. It was in Britain. It might have been a parliamentary MP over in Britain. I think he said something along the lines of the entire global economy is being held hostage by a handful of fringe politicians in the U.S. And he's totally right. You know, it's surprising to see how when these people see an opportunity to get their voices out there, to get their names known a little bit, and also to maybe get some traction on whatever issues are paramount to them, and so they'll hold an issue like this hostage. And, this just goes to show the way we run our fiscal house in this country. You know, we should have had this issue settled months, if not years ago, and instead we wait till the literally last minute. And that's okay when you're a household of a handful of people, but when you're talking the largest economy in the world, we need to have a little bit more foresight than this, I would hope, at least.
I would think so. If this doesn't pass, this could get very ugly. I mean, there's no doubt about it. So I agree. In terms of why we haven't gotten it done beforehand, no one's going to want to budge on it. And so I said, well, I'm not doing that. I'm not doing that either. And they put it off till the next day. And it's just like being a college kid waiting to write your paper till the night before.
Exactly. The paper's due at noon the next day. You're up at 9 o'clock in the morning, cranking away as many double-spaced pages as you possibly can. This has the same air to it
with a 15-point font too, right?
Exactly.
Yeah, I mean, this is the exact problem that I think a lot of people see is the polar extremes, the ultra liberals and the fervent Tea Partiers that kind of made everybody delay the issue. It's just nobody really wanted to get into it because everybody knew it was going to get messy, and they kept on putting it off. And now we find ourselves waiting until the clock's about to, or the bell's about to ring before we possibly strike a deal if the deal does pass. And I agree with Mike, it's going to get really ugly if no deal is reached.
We talked about this a little bit last week on Thursday, and we have obviously a little bit more clarity now on exactly what's going on, and we're also closer to the wire than we were on Thursday. So this actually will be going out tomorrow on Tuesday when hopefully this will be settled, but perhaps not. So let's say we go into tomorrow and midnight strikes, the bell tolls, and the impasse is still there and no deal has been reached. Where do we open up in the S&P futures? Where do we open up in the VIX cash on Wednesday? What's your guess there? We'll start with you, Mr. Big Rob K.
VIX, I could see us edging up toward that 25 figure again.
That's it. You think only 25 if there's no deal and we roll into Wednesday?
Well, I'm saying that's probably the starting point is around 25. I think we can easily see the VIX make that exponential jump, kind of the beginning of the fall of 2008, where it just starts making these big leaps. S&P, you can easily see the market down 25 to 40 points. Right from the get-go. And that's a huge move, but I think that in the back of everybody's mind, I think everybody's expecting, this is just typical, political shenanigans, and eventually they'll finally get this done. They're just going to do it last minute, and it's going to have a huge psychological impact on the market.
Yeah, I think everyone agree. Everyone expects that. So if it doesn't happen, I think the hit will be pretty severe. I would go out on a limb and say at least 30 handles in the S&P, and I'd be amazed if we were not in the mid 30s in the VIX that next day, or maybe 33 to 35 in the VIX at the very least. If we stopped at VIX at 25, I would be surprised, given the expectations that something, at the end of the day, people will think, well, they'll huff and they'll puff, but when the clock strikes, they'll put something together, so if they can't even bring that to the table, then I think this will be shocking. Tosaw, are you on board with that? You think it'll be even worse?
I think it'll be even worse, because think about it. Over the last few days, all we've been hearing about is, there's nothing to worry about. We have a deal. And then 2 minutes later, there's really not a deal. And even with all the political mumbo-jumbo saying that there is a deal, there still isn't a deal. Now, with that, we have been going down for the last week and a half, even with all the politicians assuring us that everything's okay. If once the bell tolls, as you put it, when we find out everything's not okay, I'm calling 1190. That's my open on the S&P Mini if we do not have a deal the following morning.
You calling 1190 on the S&P?
1190.
So you're calling down 100 handles about. Yeah, well, we closed at 1287, so yeah, roughly close to 100 handles.
I'm looking. I got 1280 on the Mini right now.
Oh, so on the Mini, yeah. Let's see. I have the closing prices here. I don't have the.
I mean, it's going to be ugly. We're going to have seniors out there that aren't going to get Social Security checks, and a lot of them that aren't going to get Social Security checks. One of the first places that they're going to go is to their stock mutual funds to get money from it, and I think it's going to be real ugly if we do not get a deal done. I really do.
So 100 handles in the S&P, that's got to translate. I don't have my S&P skew curve in front of me. That's got to translate into the mid-40s at the least for the VIX, I would think.
It ain't going to be pretty, folks.
Oh, you heard it here first, and it's not even from Grigas. It's from the erstwhile bull, Uncle Mike Tosaw, calling.
Notice this is with an if, though. This is if they don't get a deal. So if they don't get a deal,
fire and brimstone from the erstwhile bull, Uncle Mike Tosaw. Well, before we get too depressed, let's roll into some other news because it is all speculation right now. And of course, it is the first of the month. Hard to believe we're in August already, but c'est la vie. We are rolling into those dog days. And of course, with the first of the month come all the numbers from the old options market and the options industry about what we traded the month before. And surprise, surprise, given all this up and down and vacillation over that we saw in July. July was actually a fairly heavy month. And, you don't expect July to be one of your stronger months, given that half the market is off in the south of France for their vacations. But yet, all the movements we saw this past month generated a lot of volume. Friends over at the Options Industry Council, the OIC, reported today that total options volume for July was 348.2 million contracts, up 25.5% from July of last year. And the ADV in July was 17.4 million contracts, 32% higher than July of last year. Let's see, year-to-date volume is 12.6% higher than it was same point last year at 2.55 million contracts. And then equity options volume, I think the bulk of our listeners trade, was about 221 million contracts, up about 25% from last year. And daily ADV in equity options was about 16 million contracts in July, which was about 31% higher. And year-to-date in equity options was about 2.4 million contracts, about 13.5% higher than last year. So across the board, higher in terms of volume. And, I'm a bit of a skeptic when it comes to these numbers, so I point them out to you only with a high degree or a large amount of salt attached, and that is that the bulk of these numbers are interesting and informative for an overall trend, but the bulk of them are pure nonsense. I mean, for example, about 4% of trades in July was pure div trades alone, and that was about nearly 15 million contracts right there alone. So you see a lot of these numbers that are reported are kind of the total fire hose of volume that are coming out of the options world. But when you actually start to parse that volume and start to strip out some of the nonsense volume like div trades and maybe some of the HFT fee arb stuff that's going up with an ever-increasing frequency out there, then you start to see that the amount of volume that the actual end user, the actual retail, beginner, basic, intermediate, advanced, whoever they may be, the actual amount of volume that they can interact with is a much smaller percentage than what this actual number represents. You start talking about things like upstairs internalized volume, and that could range to a significant percentage in some of the larger names. And you start to realize that the actual amount of this volume that you can interact with, unless you had a large number of resting orders in the books and all these names, is fairly small. But nonetheless, it's informative to look into these numbers a little bit, as long as you don't get too obsessed with them and start saying, wow, the industry's up 35% this past month, or 25% this past month. You have to really look beyond the tea leaves a little bit and see how much of that volume is actually end user utility. So, but yeah, and nonetheless, interesting numbers coming out of the options world, an explosion of volume. And before we close out the old trading block, Uncle Mike, I know you're active in the metals, and good old Rob, I know you watch oil and the commodities quite a bit. So why don't we dive into our commodity rundown, starting with you, Uncle Mike, in the metals, and then we'll go with Rob in oil and the rest of the commodities.
I'm still long the puts right now. I'm leaving the top side of my collars open until this debt announcement goes through. So I think right now it's an obvious time of uncertainty. It's kind of like there's a joke we have around the office when someone leaves. We say, if any of my clients call for me, tell them that there's plenty of reason to panic. Yell, "Oh no," real loud, and then hang up quickly. Now it could be one of those times. Who knows? But that's why one of the things I always want to emphasize, though, have a plan in case you're wrong and have a plan in case you're right. And right now, we're kind of going out on a limb at this point by leaving the covered call side of our collars open, in that we're taking on the premium risk of just simply being long puts for the time being. But we feel we may be rewarded for it, and we feel that there's a good reason to believe that there's a chance for gold and silver to increase on the news of this announcement. If it doesn't, we're hedged and we're prepared for that. But if it does, then we think that could be a nice opportunity for us.
Yeah, if you think there's even a possibility of this 100-handle down move in the broad markets, and you have to stay open to the upside in your gold and silver, because that's where you're going to see a nice, robust move, to say the least. I would assume, if all of that came to pass.
I would think. You never know with any of this stuff, and I don't care how many years you've been in this business. I don't care how many years you've beaten the S&P or how much money you've made. Any trader that knows anything will always agree with what I'm about to say. You never know.
And then, Mr. K, what were you watching in the ag and commodities lands today?
Well, in crude oil was up quite a bit. We were up $2.50 going into the market open, with that deal seemingly in place. And as soon as that manufacturing number came out, it was a terrible number. We have the slowest manufacturing we've seen in 2 years. Crude just absolutely got crushed. We wound up being down on the day. In metals, I actually like Mike's play here. If a debt deal is reached overnight, we may see a little bit of a mini panic sell in metals, but probably one that's going to be very short lived. But if there's a little bit of a volatility spike, you're kind of winning on two fronts: the drop in the actual price, and plus you get a little bit of a boost in the volatility. And another market that really seemed to actually like the debt deal was actually the grain market, because with the seemingly infinite amount of debt we're writing these days, the dollar's figures to weaken, making U.S. grain a little bit more attractive. The other markets were really mixed. The soft commodities we were up in coffee and down in cocoa and some of the other markets. So kind of a mixed day. Bonds actually have me completely dumbfounded of late. I'd really, even with a debt deal in place, I really expected bonds to kind of fade off, just because eventually there's not going to be enough demand for all this debt that we're writing. China's eventually going to stop buying, and QE3 is, I think at this point, a pipe dream. It's so who's going to buy all these bonds at super low yields? I don't know, but bonds continue to rally.
Yeah, the fixed income world, especially the last few months, I tend to scratch my head at that a lot as well. You'd think bonds are a screaming sale in this environment, and yet they continue to stymie and mystify everyone who's watching them these days. I don't know who's buying these bonds here, but someone clearly is. Maybe they have more insight than I. Perhaps they are more foolish than I don't know. But someone is keeping these bonds up there. I don't know who that is.
Well, it'd be interesting to see is how much interest rates, if this doesn't go through, how much interest rates would actually rise on this one. Mark, are you locked in your refi right now? Is your rate locked? I know you said you were doing a refi. Is it locked?
It should be. We have to sign the final papers, I believe, in a couple of days. I have to see. So hopefully, yeah, we want to get this thing done pretty quick, though. Yeah, the rates are fantastic right now, and it's actually dropped over in the couple of weeks we started talking about doing this. It dropped even more. So, yeah, we want to get that locked before the 100-handle apocalypse of Tosaw comes to pass.
Only 90. And we're down one already. It's coming.
It shall be here it goes. It shall be known in the history books from this day forward as the Tosaw apocalypse. There we go.
Now it's a contingency apocalypse. Only if we don't get a deal. If we get a deal, the apocalypse prediction is off. But if we don't get a deal, that's the only time that's legit.
The Tosaw 50-50 guarantee of an apocalypse. There we go.
There we go.
By the way, when Auntie Mike was on the show, he poo-pooed your 50-50 guarantee, saying that there are some double zeros lurking out there in the wild, and that you can't guarantee 50-50. So he likened you to a roulette table, sir, and said your guarantee was more like 48%.
Oh, a 48% guarantee, huh?
So there you go.
Well, he actually, just so for everyone out there, he is actually in the delivery room right now with his wife having their third child. So
he's having another one as we speak. It seems like he just had the last one a few months ago.
2 years it's been.
Wow. Auntie Mike back in the saddle. Wow.
He's there, all right. Yeah.
Well, hats off to him and good luck to him. I've been there once so far, and it's a nerve-wracking experience to do it once. 3 times is hopefully the charm for Auntie Mike there. All right. And with that, we're going to roll right into the Odd Block.
The Odd Block.
All right, and welcome to the Odd Block. This is, of course, the section of the show where we discuss the interesting and or the unusual activity that's lighting up the tape today, or in this case, actually, some of it is from Friday, just because everyone was seemed like they were keeping their powder dry today. It wasn't too much size, unusual activity going up. So we're going to kick things off with Sonus Networks, ticker symbol SONS. And Sonus, for those of you who don't know them, Rob, I'm sure you're familiar with these guys. They make these cool in-house Wi-Fi speaker systems, I suppose you can call them, as well as some other things. They're very high-end, they're very expensive, but they're also very cool. You can play wireless music in your house and a bunch of other fun things. I'm sure the Tosaw house is wired up, and they have earnings tomorrow after the bell. His name closed at $2.90, down about 6 cents, and so it's a little name. Actually, on Friday, we saw a very large multi-exchange sweep of 10,000 contracts. And since this is the name that does about less than 1,000 a day normally, this is a pretty sizable trade for SONS. We saw, about 10,000 of the AUG3s going up, being purchased for 15 cents on Friday morning. This was an opening trade, considering that the open interest was relatively nominal on this trade. And that one trade, we talked about one of these in the past a few weeks ago, and we found another one where that one trade accounted for pretty much almost 100% of all SONS option volume on Friday. So that's pretty funny, and well over 3 times the total average daily volume for SONS that day. Sonus was rated a new hold this morning, Friday morning, I should say, by one of the analyst companies, and that tended to help dry the name up a little bit. And like I said, they have earnings after the close tomorrow, so this seems to be a purely bullish spec play on this one. It was less than 1,000 contracts open interest going into Friday, so this was all opening paper. This is the name. I mean, Rob, you follow these guys at all?
I'm aware of the brand. As far as the actual stock or options, we really don't see any order flow. I've seen some of their stuff at like Apt, very cool stuff.
Yeah, it's very cool high-end stuff, yes.
But that's the stuff where my wife basically tells me to keep walking.
Yeah, it's kind of hard to sell the wife on the $600 per unit, wireless music streaming thing for your house. That's a little bit of a not exactly a necessary expense.
No, not at all.
Probably why the stock is below $3. But nonetheless, very cool stuff, and some size upside on this name. Obviously, this thing takes off above $3. This guy is looking fairly strong to the upside. We'll find out tomorrow after the bell. And then coming up next, another little one. Cable Vision Systems, ticker symbol CVC. They closed today at $24.04, down 32 cents, or about 1.5%. This is the name that does about well under 1,000 contracts a day. They did. This is activity from Friday as well, and we saw a lot of actually bearish put buyers rolling into Cablevision with the AUG22 puts really lighting up the tape. About 4,000 of those were picked up for about 30 cents. And there was no open interest at all in that strike, so these are all opening trades. They have Q2 earnings for this one coming up on Thursday before the bell. And so this is either a very sizable downside bet on good old Cablevision, I should say, or it's quite possibly also someone hedging their long underlying, thinking that Cablevision is going to move to the downside. Also, potentially, we saw some activity in Time Warner, which is a competitor, and they announced on Friday that their subscriptions for the second quarter had dropped more than was expected, and maybe this trader here thinks the same thing is going to happen to Cablevision, so he's putting on a spec to the downside ahead of earnings. But regardless, we saw about 4,000 of these AUG22s, which is about 4 times the ADV for this name. A lot of bears coming in to Cablevision ahead of earnings.
Well, actually, Cablevision is kind of the Netflix of the world, and not necessarily just Netflix, but other streaming media, kind of killing it. It never really got a lot of momentum behind their ISP, the Optimum Online, and they also own a Clearwater Cinemas. So just all these factors are I think we're going to probably see, cable companies taking their lumps. The bigger companies that have ISP, the Time Warners, the Comcasts of the world, I think they'll do okay just because people are actually going to speed up their connections. So they're going to buy more premium internet speeds. But I think you're going to see a lot of them, those same people cutting back and kind of substituting the premium channels for the streaming media. So unfortunately, Cablevision does not really have that going for them. So I think this could be just a purely big downside bet.
And then we're going to close out with Cavium Networks, ticker symbol CAVM. They closed today at $33.88, down 61 cents, or about 2%. This is a name that does about 2,000 contracts a day. They did nearly 9,000 today, so well over 4 times their ADV. And the bulk of this seemed to be in a sized player rolling down some very profitable bearish puts. This is the semiconductor name. This trade lit up our tape right in the opening minutes of the day, the first 10 minutes of the session, with someone coming in and opening up on these AUG34 puts. He picked up 3,000 of them right in the first 10 minutes of the day for $1.65 a piece. These are pretty much at the money puts. And if you dig into the open interest numbers a little bit, it looks like actually this is a continuation or a rolling of a position that he opened up initially last Tuesday on the AUG37 strike, where he picked up the same number, 3,000 of the AUG37 puts for $1.90. Today he dumped those for about $3.30, so taking some decent profits on those and rolling them down into the AUG34 strike. So he's continuing his bearish stance on Cavium here, but he's putting his money where his mouth is this time and actually putting his profits to work this time, as opposed to the opening trade he made on Tuesday. Not surprisingly, this guy's hoping for Cavium to drop about 5% below where it's trading right now, down to about 32.35 for this next series of puts to break even. And this name has earnings tomorrow after the close as well, so we'll see if this trader has luck on his side yet again tomorrow after the bell. But yeah, he's already to the good on these puts, so he's probably not too worried about the earnings coming out tomorrow. And that is going to close out the old odd block, and now we're going to roll right into the Crazy Rob K block, aka the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express block. This is the portion of the show where Big Rob K takes the reins from me, and Uncle Mike and I sit back and crack a few brews and we relax. So Big Rob K, take it away, sir.
Well, today I'd like to talk about adapting your trading methodology or your trading schedule to adapt to certain markets. Now, we see this happen quite a bit with the currency markets if you're a futures trader, where you get in, you get up, you get your morning coffee, you see the euros moved 150 points, and you're ready to get going, and then it basically stalls out for the remainder of the day. This is where chart watching and kind of picking up patterns, and when the market's moving, it could actually either you can refocus your efforts to either, trading a different market that does move during trading hours. Most of us work for a living and don't have the luxury of being in front of the screen at 3 in the morning local time when a lot of these markets are making their moves, and we've even seen it with equities, where basically the equities market makes its move. It takes its cue from Europe and Asia, makes its move right at the beginning of the day, and is kind of goes into cruise control for the remainder of the day. Especially those of you day trading, it makes for really difficult trading. But those position trading, you just have to kind of adapt. I mean, you have to kind of set target levels, get your orders in early, review different markets, or if you're a futures trader, pick out markets that trade actively in hours that you're used to trading. And we see this. I've seen this happen, for years. Especially, the forex market is very cyclical. Either everybody's trading it, or very few people trade it. Where people just churn their own accounts, just trade these, generate tons of commission, but aren't really accomplishing much because the market isn't moving. They're trying to just capture a couple pips here and there, and fortunately for the retail trader, the commission rates have come down quite a bit, but you really have no margin for error in the event that the market does make that freak move intraday. You're left scrambling, and it could wipe out weeks worth of profits in just one sharp move like the Swiss had last week. We rally just out of nowhere, to over 200 points. So that's kind of what I wanted to touch on, and actually wanted to talk about something that we've talked about before on our show, and that's the Google and moving into kind of making a play on Groupon. Now that kind of all these Web 2.0 companies are coming out and going public, and Groupon is kind of in a really vulnerable position as is. They're not really making money. Now their accounting methods are being questioned. And today the Google buys Daily Deals, which is an aggregator, which basically does what Groupon does. And a lot of traders, if you survive the internet bubble, I think that you really want to go back and kind of learn the same lessons that we learned from those from that era, and the pets.com and a lot of these companies that were just kind of going belly up. I think it's time to really look at companies that are positioned well and not necessarily buy into the hype. And jokingly, I think when LinkedIn had its IPO, I mentioned, when Facebook comes out with Facebook Professional, that's pretty much going to be the end of LinkedIn. And I think that this past week that there was an announcement that Facebook is exploring. It was a very quiet announcement because it came off the heels of Apple earnings. So this is actually a couple weeks ago. They had mentioned that they're exploring a professional type of service, kind of like a Facebook Professional. So it creates great volatility. So if you like volatility, those are probably names that are going to continue to be volatile and be very tradable. But if you're the long-term trader, to really step back and don't necessarily get caught up in a product that you use. I'm a Groupon user. I like the service, but whether or not the company is going to be viable, 2 or 3 years from now, that's something that I don't know if I'd put my faith behind. So just a kind of a note on because we get a lot of questions from customers about these. Just people can't wait till the next IPO comes out, and I actually liked the Dunkin' Brands IPO last week because there's a company that actually makes money, that actually has a solid business that actually had an IPO, and I liked it, but we didn't get the same fervor that we had with LinkedIn and some of these and Groupon and some of these IPOs that came out from the Web 2.0 companies.
What fun is a company that makes money in this day and age, Rob? That's so passé. That's so boring. That's so
what's
blasé.
the point of going public if you already make money?
Yeah.
Yeah, I mean, if you don't need to keep the Ponzi scheme alive and feed your VCs, why bother going public?
I mean, having a business model is so outdated. Yeah.
These are the old debates we used to have back. You're right, in the late '90s too. What's their business model? Doesn't matter. They're .com, buy-in, and like things like Groupon. You're right. I mean, people think they're not exactly these new startups, particularly the Silicon Valley type startups, where they're so beholden to VC, and that seems to be so much part of the model. Is the business model is not exactly designed to create a viable long-term business. It's designed to entice VC. And once you bring in VC, the VC's MO is, of course, to create a liquidity event for themselves. So nowhere in those early years is anyone really considering the long-term viability of the model or the business. They're really just considering how they can get from one liquidity event to the next. And if you saw the recent rounds that Groupon had, I think they raised close to, $1 billion, and how much of it went to the actual operating of the business? Less than 10%. The rest went to feed the early rounds of VCs and investors. So keep that in mind when you're playing in these names, that their MO and what they're looking for is probably a little bit different than someone who's looking to invest in a sustainable company.
Yeah, and it's not to say that these companies go out there with these bad intentions. The venture capitalists have to make their money, but are they in a position where they're going to be the next the next Amazon or even to kind of lesser extent eBay, or are they going to be one of these companies that really never has this great idea, but somebody absorbs it?
Yeah, that seems to be the MO for most of these companies. They're not looking to build a new Google or Microsoft. They're looking to build a viable concern that can be flipped to a Google or a Microsoft, something along those lines. And that's the real exit plan. That's the MO for them. Then they're out on to the next thing. The VCs are out and on to the next thing. But Rob, before we go, actually, let's make this a quick listener question, because it is one that's been hovering around for a while, and I don't know the answer myself, and you're a good one to answer this because you do some work with those Extend guys. So let's roll into the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, and welcome to the mail block. This is, of course, where we answer questions from you, the listener, and today is one for the boys over at OX, and since Rob, you're here today, this is for you, but this is actually one I've been saving for you because I think it's a good one for you. And the question that came from our forum from a user named Simon, and his title of his thread was, how do I execute a ratio spread using Extend? And he writes, Option Block crew, particularly Tim, John, and the rest of the OX gang, I have a question about ratio spread execution using Extend, in particular ratio strangles. I recently had a position where I was long the underlying of a stock. I wanted to write covered calls against my underlying, but also short some puts on the downside for additional income, or to lower my cost basis on the stock if it moves south. So I wanted to execute essentially a 2-by-1 ratio strangle where I sold 2 calls for every put. However, when I put the stock ticker into the trade ticket and then selected strangles or spreads from the advanced menu, assuming, of course, he's using Extend here, it won't let me execute the trade. It keeps rejecting it and saying that strangles/straddles must have the same number of contracts on each leg. So I ended up having to execute each leg separately, which was a pain in the old rear and cost me more money. How can I avoid this scenario in the future? Can you execute ratios using Extend, or do I have to use the website, or gasp, do I have to call you guys on the desk? Thanks, and he wrote in parentheses, and I love Tim's hair on the live show. So indeed, he is a fan if you like Tim's hair. But Rob, what is the answer to that? Can you execute ratio spreads, or in this case, ratio strangles using Extend, or do you have to do the individual legs through the website?
Well, ratio spreads you can place through Extend. Unfortunately, strangles/straddles, those are orders that do have to. If you're going to use a ratio, you are going to have to call in. I know that for a lot of traders, it's quite cumbersome having to call in and place a trade. We never charge anything extra for placing an order over the phone. So we do encourage you to give us a call. But, if it's in the heat of the moment, the market's really moving and you're worried about market risk, you can't always place two separate orders. And we are rather accommodating when it comes to the commission credits. And, if we see that in the session log that you did, in fact, try to place it that way, we may just waive one side of that commission or give you some sort of incentive. But, even orders that aren't exchange accepted ratios, actually last Thursday, we do a lot of it on the execution end where the exchange is rejected, and once it gets kicked out from 3 exchanges, it pops up on our monitor, and we lug it if it's close, or if it's way far away from the market, we will reject it back to the customer. But we do work quite a few odd ratio spreads, and actually one customer just kept on just hammering me last Thursday. Just very odd lot, 1x9, 3x18. And I was so done working those orders, and it just kept on flowing in. And those are a little bit tricky because you have to break out the old calculator and make sure that it is in fact lining up, because I think that everybody in execution has made that mistake where you think that you got a customer a better fill, and then you actually work out the math and you realize that you just made an error. So, but
especially on those good 1x9s.
Yeah, so we do. You can place regular ratio spreads, even combos where you're doing call put, where you're buying a call, selling a put, or vice versa. Those you can place through Extend. It's just the straddle and strangle that pretty much every order form on the website is rigid about. So, but those orders, place them separately and give us a call. We may be able to help you out the commission, or give us a call and we could place the trade for you. Again, it doesn't cost you any more than placing the order online. And
so Tosaw, remember that when you're doing your ratio stupids next time through Extend.
No wonder that's why they wouldn't let me do it.
Yeah.
Speaking of which, you guys need a drop down on Extend just for stupids. There's spreads, there's straddles, there's strangles, there's combos. I don't see it. How's Tosaw able to do his trades? He has no stupid drop down.
Hey, you just got to leg into them. Some things are worth waiting for, Mark.
Hence the name The Stupid, but I digress. Okay. Thank you for that, Rob. That was an interesting question that I thought was worthy of addressing on the air. I'm sure not all of our listeners are doing ratio strangles, but nonetheless, it's good to know what exact functionality is there in the Extend platform for people to play around with, even if Uncle Mike can't do all of his stupids through Extend. All right, and that's going to do it for the mail block, and now we're going to roll into the Around the Block segment.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we discuss what's going on, what's coming up for the coming sessions, and, of course, everyone's eyes are going to be on the debt debate tomorrow. That's really going to be the large driver. As Uncle Mike said in the intro, or in the trading block, he expects it could potentially be a severe sell-off in the broad market going into Wednesday if we don't get a deal in place and we do indeed roll past that deadline. I believe we have coined it the Tosaw apocalypse, or perhaps the Tosaw 48% apocalypse. How about that? Maybe I'm vacillating a wee bit there, but it's interesting to see nonetheless that you are indeed such a champion of the markets normally, and now you are preparing for the worst. So batten down the hatchets there.
Long-term bullish, short-term, very cautious.
Well, of course.
They're stocking up the bunker with Spam and water.
Exactly. The Tosaw bunker is well stocked, and the guns are loaded for the coming apocalypse. Of course, there are a few other things on the horizon after the implosion or the potential implosion on Wednesday. We have earnings coming out the rest of this week. We have talking about options numbers in the trading block, the SIBO earnings coming out before the bell on Thursday. I'm not sure if you guys have been watching the SIBO at all, but their stock's not exactly lighting up the tape these days. It's below 23 handle right now, closed at 22.83 today, and they announced that their ADV was up about 20% in July from last year, and I think more interestingly, SPX and VIX were lighting up the tape, with VIX really gapping up, VIX options up about 156% from last July. Of course, that's last summer. You don't expect much volume in VIX options in the summer, so this July is probably a bit of an outlier on that, but nonetheless, something to consider if you are indeed thinking about trading SIBO going into the earnings, perhaps shorting some downside or picking up the upside or whatever you feel is going on in SIBO. Interesting one to watch coming up. One we've also discussed quite a bit on the show in the past, a former odd block darling, was of RDN. Back when Mr. Sebastian and I were slinging the 7 calls, it was looking far healthier than it is right now with close today, I believe, almost at $3. So this name really is seen some rough days. They have earnings before the open tomorrow. And, of course, Grigas isn't here, but I'll mention his favorite nonetheless. Good old Tesla. Earnings after the close on Wednesday. Tesla Motors, of course, they make those fancy-dancy Tesla Roadsters. At least they used to. They got rid of the Roadster now. But they're a fun one to trade going into earnings as well. I know we talked about them on the past quite a bit with Mr. Grigas and I favoring some nice short strangles going into Tesla earnings and have not been disappointed so far. And, of course, we can't finish up the old around the block without naming the name that Rob discussed in the Xpress block, and I think Auntie Mike is still a fan of, LNKD, LinkedIn. I know Auntie Mike's been big on this. Have you been part of the LinkedIn gang over at KYO, or are you pretty much staying in the metals arena these days, Uncle Mike?
Staying away from the LinkedIn. Nothing against it, but I just with a lot of the people that I worked with, we don't have too much of a place for them right now.
So is Auntie Mike out of the LinkedIn as well? I know he was hovering around that 97 strike last I talked to him, looking to get back in.
I haven't spoken with him today. He's just been kind of he's been out of pocket. He has his own tweets to worry about today. So
well,
I'm
not
sure where he's at
not
right
so
now.
much today, but just maybe in general. Their earnings are, of course, after the close, and as Rob indicated, there's some serious vol here. Of course, LinkedIn's moved about 40 handles almost over the past month. And if Facebook does indeed come out with their LinkedIn Professional, you might see LNKD revisiting those 70 levels of a month ago relatively quickly. Nonetheless, earnings coming up after the close on Thursday, so another highly volatile name to play. Of course, where all these prices will be on Wednesday if we don't get a deal, that's another question entirely, and how much beta these names have in them. But it might behoove you to keep your powder dry until we see exactly what happens, and if Uncle Mike is right and the world ends on Wednesday or not, and or if we do have a deal and these names are all off to the upside ahead of earnings. Nonetheless, there is a lot to watch this week, even if you're not paying full attention to the debt kerfuffle / debacle. All right, that's going to do it for Around the Block. That's also going to do it for this episode of the Option Block. I want to thank all of my stalwart compatriots for joining me on the show today, starting off with you, Uncle Mike Tosaw. What is coming up over at Know Your Options aside from playing the Watch Washington game?
The Watch Washington game. Yeah, you know it's a scary time when traders are watching politicians and politicians are watching traders.
Exactly.
Monday night, calendars and diagonals. We'll be back in the mix with our weekly webinars. We're excited about it. Just going to talk about ways with which you can play them. There's actually quite a few opportunities in the calendar and diagonal world right now with the vol that's going on. We're looking at a lot of that right now and a lot of our hedging. So we're excited. I'd love to have you. Stop on by knowyouroptionsinc.com.
And Mr. Rob Kurzatkowski, what is going on in the land of OX for the next few sessions?
Well, tomorrow we have our monthly futures outlook with Jim Wyckoff, it's always entertaining. He's always got some great insight. We've been talking a lot about the VIX. Obviously, we talk really a lot about the VIX and all the time on the show. And 1 week from tomorrow on the 9th, at 2 p.m. Eastern, Russell Rhodes at the Options Institute is actually going to discuss the VIX term structure and trading VIX options. So a lot of traders that maybe aren't to speed on the VIX, it's a really good webinar. It definitely want to tune in and take a look at that. And even if you're not necessarily trading VIX, just to trade VIX, to actually learn how to use it as a hedge. maybe understand a little bit more and maybe its limitations. It's a really good webinar.
Now, this is VIX, you say? I'm not familiar with that name.
Volatility.
Is that the ticker symbol?
What is the VIX anyway?
All right. With that note of silliness, that's going to do it for this episode of The Option Block. I want to thank all of our listeners out there for downloading and streaming and subscribing to the show, and particularly to our new, brand spanking new Option Block standalone feed out there in iTunes. And if you swing over to the iTunes investing store right now in the podcast section, you'll see the new Option Block feed featured up there in the new and noteworthy section, and that is all due to you listeners and to your support and to flocking into the new feed and letting the folks over at Apple know that it is indeed new and noteworthy. And there will be more new feeds to come from our other shows in the coming weeks, so stay tuned to those. But thanks again for listening, and we'll see you hopefully next time if the world doesn't end on Wednesday. Hopefully we'll see you right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.